Welcome to Oklahoma Policy Institute's State Budget Summit. My name is David Blatt, and I'm Executive Director of Oklahoma Policy Institute. For those of you not familiar with us, we are a Tulsa-based think tank. We provide information, analysis, and ideas on state policy issues, guided by a pair of core commitments. One is to the fair and adequate funding of public services. The other is to the expansion of economic opportunity and financial security for all Oklahomans. It is great to see so many people here. I think we may be the hottest ticket in town that doesn't involve Kevin Durant. We actually have we had reserved a few tables up front for the participants who are going to be on the panels today. It looks like we're going to be okay with this table up here. So if you're looking for seats and need some, feel free to fill up that table at least, and we may have a couple of other seats in the front tables as well. So the title for today's event was Navigating the Perilous Fiscal Waters. We chose that because back in deep doo-doo sounded a little, just had too few syllables. So these are difficult times, and these are vital issues that we are facing. The choices that we make regarding budget and taxes have real impact on the lives of Oklahomans, on whether a child will be able to take the classes, school child will be able to take the classes that they need to be prepared for college, on whether there will be sufficient staffing in a prison to prevent a sexual assault, whether a family whose child with developmental disabilities will finally get the home and community-based services they've been waiting for years, whether we are able to meet our pension obligations to current and future state workers. We're here, our hope today is to provide insights about the situation we're in and how best to make the right decisions regarding budget and taxes, not just for the coming year, but for the long term. There's going to be 4 parts to today. I'm going to begin with an overview presentation, nuts and bolts, or what we're titling it, 11 Things You Should Know About Oklahoma Budget and Taxes. Then we have a great panel of state leaders who will be joining us, beginning probably around 10 o'clock, 10:15, and going until lunch. Then we will break for lunch. We'll give some instructions about lunch. Then we will have the national perspective on the federal budget provided by William Hoagland from the Bipartisan Policy Center. And then the last part of the day is going to be dedicated to transforming information into action. Many of you have registered to participate in the full day, and then we're going to turn from a policy forum into an advocacy training and workshop. A couple of quick notes before we get into it. The presentations, mine, Bill Hoagland's, and then the ones this afternoon, are online on our website. If you go to okpolicy.org, there's an events tab, and you can get those presentations, and we will email those out at the end of the day as well. We are also filming the event, and we will be posting the videos for this morning's sessions and the lunch keynote in the coming days, and we will let you know about that as well. We're going to send around an email providing you to a link with an online evaluation sometime today, and very much hope that you will fill out the evaluation. The feedback will be really important as we think about future events. And then finally, and most importantly, if you are tweeting today's event, the hashtag is OKBudget2014, and I'm D. Blatt OK, and we are at OK Policy. And if you follow OK Policy on Twitter, we'll be providing the Twitter names of our speakers as we go along. So help get the word out to those who were not able to join us and be here for the presentation. So now, if I get the technology working. So I want to start by providing an overview of state budget and taxes, which really has two purposes. Some of it is just basic information that many of you who are experienced advocates, am I referencing my notes? Can we maybe turn the lights up quarter way or halfway? So, there we go, perfect. Oh! Yes. So part of it is just to provide some basic data and information that will inform the conversation that we'll be having the rest of the day. And then in part it is also so that we can lay out what we see as some of the key issues and challenges facing the state. So here are the 11 things you should know, and of course if you've seen Spinal Tap, you know it always should go up to 11. The first thing you should know, Oklahoma is a low tax state. Depending on whether you measure total state and local taxes on a per capita basis or the share of personal income, we are, by either measure or other measures that have been considered, we are among the lowest tax state in the nation. We pay, on average, 26% less per capita than the national average. So the average Oklahoman is paying $3,168 a year in state and local taxes. Nationally, it's about $4,295, and this was for 2011. Texas, our neighbor to the south, is about $400 more per capita than Oklahoma is. If you look at it as a share of personal income, we're actually 47th. We rank below only Texas, or Tennessee, Alabama, and South Dakota. So we pay less in state and local taxes than all of our neighboring states and just about every other state. And of every dollar that Oklahomans earn, we pay about every $100 we pay $8.41 in state and local taxes. So I think it's very hard to challenge the fact that Oklahoma is a low tax state. Turning to the mix of taxes, this chart shows state and local taxes together by source in 2011, and Oklahoma is among the states that does have what they talk about as the three stools of major taxes: income tax, sales tax, and property tax. Compared to most states, we are low on property tax, and I'll be saying more about that in a while. We are a little higher on sales tax, and we are also high on the other category, which here, as you can see, makes up 11%, and that's because we collect severance taxes, tax on oil and gas, which some states do, but many states don't have that. But you can see that if you combine general sales, income tax, property tax, and others, you're already about 80% of total state and local taxes. If you look at state taxes alone, this shows the 6 largest state taxes, which together make up 86% of state tax dollars in 2012. Our largest state tax is the personal income tax, followed by the general sales tax. Gross production tax is a little under 10%, motor vehicle fuel tax, corporate income tax. There is no other single tax that makes up more than 2% of total tax revenue. So really you have the big 2, and then you have 4 others that make up the bulk of the money. I'm going to look specifically at a couple of the largest taxes. The income tax, as we saw from the previous slide, the income tax is the single largest state tax, but income tax collections have been flat for the last 6 or 7 years. So you can see that we hit a peak in about 2006, then with tax cuts that were enacted in the mid-2000s, followed by the recession, things flattened, declined sharply, and have recovered, but they haven't fully recovered, or hadn't and by 2012. By 2013, income tax collections slightly exceeded what they were before the downturn, but this is not adjusted for inflation or population growth. The severance tax or gross production tax, we have a very small one on petroleum, but the two major ones are on oil and gas. And you can see that it tends to be the most volatile tax. You can see that collections from oil and gas, not surprisingly, fluctuate greatly. We had a peak in about 2008, and then we had declines, some of that related to declining natural gas prices, some of it having to do with tax credits and rebates. What is interesting, if you look at this, is that until 2010, you had natural gas collections far outdistancing oil collections, and then you see that that flips over the last 3 years, and that's what continued through 2013 and 2014, to where collections from oil are now substantially exceeding collections from natural gas. If you look at property tax, Oklahoma is among the lowest property tax states in the nation. We collect per capita $642 in 2010. That is less than half the national average of $1,434 for property tax across all 50 states, and then substantially less than our 6 neighboring states. And really, if you look at the difference between Oklahoma's property tax and the national average, that accounts for much of the difference between our total taxes and the national average. So we're about $800 less just in property tax, and we're about $1,100 less in all taxes. Third point about state budget and taxes. Low-income Oklahomans pay more. If you look at what percent of average household income goes to paying state and local taxes, low-income Oklahomans pay substantially more. In fact, they pay about twice as much in all state and local taxes, income, sales, property, than do the wealthiest segment of the population. The Oklahoma tax system does have certain progressive features. We provide a small refundable earned income tax credit, which benefits low-income working families. We provide a refundable credit to reduce the impact of the sales tax on groceries, which is $40 per household member up to $50,000 a year, which hasn't been adjusted for a long time. But then the income tax has several regressive, or the tax system has several regressive features as well. We don't index our income tax brackets to inflation, so over time an increasing share of income ends up being taxed at the top rate. We are among few states that does tax groceries. And if you look at our sales tax overall, it is fairly high. Depending on exactly how you measure, we're about the 5th highest state sales tax rate. This is the same data. This is from the Institute for Taxation and Economic Policy. Same data that generated the previous chart. What it does is it breaks out the tax incidence or tax levels by different taxes. And what you see here is that the slightly progressive features of the income tax partially but don't fully offset the highly regressive aspects of the sales tax. So because low-income people consume far more of their income on taxable goods, that's where you see those in the lowest 20% are paying 8% of their income in general sales tax and various selective sales and excise taxes. On the income tax side, you can see that it is slightly regressive. The highest income people actually pay a little bit less, and that's because they get to deduct their state income tax from their federal tax returns, which you can see there's an offset there in the bottom. What's also interesting to note is that while we often focus on the top rate and say that Oklahomans pay 5.25% now, almost nobody pays the full top rate on their entire income. So when you look at tax brackets, when you look at either the standard deduction or itemized deduction, you can see that for those in the highest income bracket, the effective income tax rate is somewhere between 3 and 3.5%. Fourth point, while we're talking about taxes, taxes have been cut substantially in recent years. So there was a series of tax cuts that were approved between 2004 and 2007 that were large, that were permanent, and that were backloaded. So many of the cuts were enacted in 2004, 2005, but they didn't fully take effect until later. And then the last one, there was a trigger mechanism, so we actually saw the last cut of the top income tax rate went down from 5.5 to 5.25. That took effect in 2012. There were other important tax cuts enacted during that period as well. The standard deduction was raised and pegged to the federal standard deduction, so that did provide some relief to low-income households. We provided a capital gains exemption for the sale of Oklahoma-owned assets, which is now subject of court disputes. We expanded the property tax caps for seniors in particular, and then we expanded retirement tax breaks, so an increasing share of retirement income is not taxable. Of those tax cuts that were passed in the 2000s, again, this is the analysis from ITEP, about 70% of the total benefit, even though we did increase the standard deduction and provided some advantages to moderate income homeowners and seniors, most of the benefit went to the wealthiest 20% of households. Overall, made our tax system somewhat more regressive than it had been already. Getting to more recent times, back in 2012, many of you will remember there was a concerted effort led by the governor and some others to dramatically reduce and ultimately eliminate the income tax. That effort failed in 2012. You can applaud. No, we won't. Last year, they came back with a more modest proposal, but still a significant tax cut, which would have lowered the top rate down to 5% in 2015, and then with a trigger mechanism down further to 4.85 in 2016. Because the cut was deferred, it would have had a fairly minimal revenue impact for next year's budget, about $54 million. But if it had been fully phased in, it was going to be about a $250 million tax cut by 2017. By simply cutting the top income tax rate, most of the benefit would have gone to the highest income households. However, that bill was struck down by the Supreme Court last month, since it had been coupled with the funding for the capital bond repair. The court determined that it violated the single subject rule. So if you look at state tax collections, revenues have not fully recovered to pre-downturn levels. And so there are a couple of lines here. The red line is the total tax collections. And you can see that overall that line is going up, although it has taken turns down during periods of economic downturns in the 1980s, in the early 2000s, and then most steeply along with the Great Recession of 2008 to 2010, but it still is overall rising. What you see with the blue line is state tax collections as a share of state personal income, which is a pretty basic, fair measure of the overall state economy. And tax collections have not been keeping pace with state economic growth overall. So you see that that blue line goes from state tax collections having been up to 7.5% of state personal income, it has fallen all the way down to just under 6% in recent years. And there are policy decisions that account for that relating to tax policy. There's also structural changes in the economy, particularly moving from a goods-based economy to a service-based economy, move towards online sales, various things that are going on that are not entirely within the domain of policymakers, but policy decisions have contributed to that as well. This chart looks at annual general revenue collections from 2006 to 2013. And it shows first how steep the decline in revenue collections were during the downturn. We fell from $5.9 billion all the way down to $4.6 billion. And it shows that the recovery has been partial. We were growing again in 2011 and 2012. And then 2013 saw growth of only about $40 million, less than 1%. This is only general revenue collections, which is what we've often used. There's other things going on here too in terms of money not going into the general revenue fund, going to roads, going to tax rebates and other things. But the general revenue fund is our largest fund for funding state government, so what's happening there is of real significance. This chart looks at year-to-date revenue collections. So from the start of the fiscal year in July through the end of the fiscal year in, through halfway through the fiscal year in December. So this includes the revenue report from Tuesday that came from OMES. And you can see that if you look at current year 2014, we remain behind the last 2 years. So we're down about 1.5% from last year. We're also down almost 7% from the certified estimate. I'll say a little bit more about this. There's a 5% cushion in the budget. We only appropriate at 95% of projections, but at this point we're only at 93%. Now, the Board of Equalization met in December and certified estimates for the rest of the year, and the estimate is that we will be able to catch up somewhat. We're not going to be below that 5% hole, but that the projection is that we will be up some from last year, $152 million, but $134 million below the estimate. They'll do another projection of this year's revenue in mid-February. Sixth point about state budget and taxes, and that is the lion's share of state appropriations goes to just 10 state agencies. When we talk about core services, we talk about education, public safety, healthcare, human services, and transportation. 10 agencies within those core areas of state government receive almost 90% of total appropriations. And that 88% figure remains consistent year in and year out during up years and down years. All the other appropriated state agencies, which is over 60, I think it's 64 now, together they make up only 12% of the total budget. And that includes the Tax Commission, the Health Department, Veterans Care Facilities, all the regulatory, administrative, judicial, legislative agencies. Together, they make up around 12%. So this really shows how when you do have revenue downturns, when you are facing budget cuts, there is no way to spare core services. That's where the money is. So when we did have the last budget downturn, there were certainly real efforts made to try to cushion the blow for core services, but ultimately there was no choice but to cut common education and human services and public safety, because that's where the dollars are. Seventh point, as we've seen, that State revenues have never fully recovered. State budgets have been cut pretty sharply in recent years. So this chart looks at state appropriations as a share of personal income. We saw total tax collections as a share of personal income before. This is state tax collections. And for an extended period of time, for about 2 decades, we were consistently between 5.5% and 6.5%. That fell during the downturn of the early 2000s. It recovered somewhat, but not that much. We remember those good years of 2006, 2007, 2008. There was growth, and we did see growth in appropriations, but not back to historical levels. And look what's happened since the downturn. We are now under 4.5%. So I did a little bit of calculation and said, what if appropriations this year were at historic levels of 5.5% of total state personal income? If that had been the case in 2013, state appropriations would have been about $8.7 billion compared to actual appropriation of about $6.8 billion. So if we just stayed sort of at the bottom part of that historical band and we were still appropriating at 5.5% of state personal income, there would have been $1.5 billion to $2 billion more in the budget last year. We don't have updated full personal income numbers for this year. So when we're talking about growing government, and sometimes point to total spending, this I think is an important point to keep in mind. The size of the budget, tax collections have been declining substantially. If we look at annual state appropriations, this shows going back to 2006. We had hit $7.1 billion in 2009. That was cut substantially, not as much as revenues fell, because we were able to use federal stimulus dollars, rainy day fund money, various one-time budget and tax maneuvers in order to cushion the blow and not make the cuts as steep as they otherwise would have been. We've seen some growth the last 3 years, so we have now, for the last 2 years, we've gone from $6.6 billion in appropriations to $7.2 billion in appropriations. If you adjust, though, for inflation in real 2013 dollars, the FY 2014 budget is almost $600 million below what it was in 2009. And if you look at the budget in inflation adjusted 2013 dollars, 40 of the 73 state appropriated agencies remain 20% or more below where they were in 2009 funding. So we really have tightened the belt across state government quite deeply. So that's sort of the large picture of state budget overall. I want to just turn to a few areas of state government to see how that's played out. Public education, as many or all of you know in this room, has been strongly impacted. So if you look at the money that comes from the state through the state aid formula to school districts across the nation, we are down over $200 million from where we were in 2008. There was a slight increase last year in state aid funding of about $20 million. It was the first increase that we've seen in about 5 or 6 years, but still over $200 million behind. At the same time, the number of public school students has continued to rise steadily. It's up close to 40,000 students during the same time. So clearly, per pupil funding, when you have more students, fewer dollars, per pupil funding has been squeezed. What I think came as a surprise and dismay of many in Oklahoma was when the Center on Budget and Policy Priorities looked at common education funding across the nation. Oklahoma had suffered the steepest cuts in per pupil funding. They've adjusted for inflation here, and we're down 22.8% since 2008, and that is the worst in the nation. If you look all the way down to the bottom, which is the state that has increased the most, another major energy producing state, North Dakota, is there as a state that has increased per pupil funding. So it really does make you wonder what's going on in Oklahoma. Higher education has also been strongly affected. We are not at the top of the list here, we're more in the middle, but adjusted for inflation again, our funding for higher education has been cut by about a fifth since 2008. And we put this up on our blog this week just to give an idea of how significant the cuts have been to the correction system. If you look at inmates in public prisons, since 2000, we have about 2,700 more inmates, and we are down almost a little bit over 500 correctional officers since 2008. And it is, or sorry, since 2000 and 2008, the cuts have been especially significant, over 400 between 2008 and the end of fiscal year 2013, and the situation just continues to deteriorate. The most recent numbers that I was able to find were from the end of October. We were up to 18,098 inmates, so another couple hundred inmates since the end of the fiscal year, and we're now down to 1,543 correctional officers. So lost another 40, and that's at the end of October, and I would not be too surprised that those numbers are down again. Sean is nodding. Overall, the Department of Corrections is staffed at 61% of authorized FTEs. And this is only for the public prison inmate population, because we don't have comparable staffing numbers for privately operated facilities. If you looked at the inmate population overall, similar trend, but greater growth. What have I done? Okay. 8th point is just a reminder that when we're talking about budget and taxes, that Oklahoma has a strict system of constitutionally based tax and spending limits. So we have a balanced budget requirement. In order to try to avoid budget shortfalls, the legislature can only appropriate at 95% of most funds, including the General Revenue Fund and several others. If you fall, it actually should stay, if actual collections stay below 95%, because we're below 95%, they're not actually implementing across-the-board cuts, because the expectation is we'll get above 95%. So we provide a cushion. On the tax side, we have State Question 640, which, as you all know, says that the only way to raise taxes is by a 3/4 vote of both chambers or a vote of the people at the time of the next general election. We don't have a state property tax or any local income tax, and then any changes in property tax require a statewide vote. One of the things we have is a rainy day fund, where when revenue collections come in above the estimate, general revenue comes in above the estimate, the surplus is put in the rainy day fund, which can only be spent under particular circumstances. Current year shortfall, if there's going to be a shortfall next year, or 1/4 is available upon declaration of an emergency. I think people are going to be looking at this somewhat more carefully. Our initial understanding is that the only money that might be available next year would be the 1/4 that can be made available upon declaration of an emergency and an appropriate vote of both chambers. So it's possible that this state could tap into a quarter of what is now $535 million to help address budget shortfalls next year. Speaking of next year, the Board of Equalization certified the amount of money available next year back in December. They're going to do this again in February, and as you've heard, they certified $170 million less as available next year. Why we're actually going to be down $170 million gets very complicated. A lot of that has to do with money that was appropriated out of the special cash fund last year, transfers of agency balances. Only some of it is expectations that general revenue and the 1017 fund are going to be down. We don't know what it's going to look like when they have the February certification and once the legislature gets to work. I think there's good reason to think that there will be much less of a shortfall than $170 million. What we are saying is that there may be less money next year than there was this year, but that'll depend both on what's certified in February and then various decisions that the legislature will make. What we do know is that we face significant and growing needs. So not to go through the entire list, but we know that state employees have gone, many have gone 6 years without a pay raise. We know we have a staffing crisis in our correctional system, which is having real impact and could have larger ones. There was an article yesterday on Oklahomans with developmental disabilities who've been on a waiting list, over 7,000 people waiting for home and community-based services for, in some cases, over 8 years, which is, I think, a shame to the state that demands urgent attention that never receives it. We also know many other services, those for individuals with mental illness. We also have waiting lists. Schools are facing growing obligations with limited resources. And then, I'm not going to say much about this. Our keynote speaker may be able to say more, but even with the federal budget agreement, which does away with the sequester, we know that federal funding has been cut and will continue to be very tight. So all of that creates serious short-term challenges. A significant part of the explanation for the problems that we are facing has to do with the growing cost of tax breaks, and particularly the tax breaks that were enacted back in the early 1990s for horizontal and deep well drilling, and then were modified back in 2010 as part of an agreement to try to get us through the last budget downturn. We'll have more opportunity to talk about this, I think, during the panel, but just to look at the numbers, if you look at the projected cost of a reduced 1% tax rate for 48 months for horizontal drilling that had been $25 million a year or less for a long period of time, it shot up to $80 to $100 million a year. These numbers exclude money that is being paid out, that were deferred and being paid out in rebates. That the 11, 12, and 13 numbers are actually understated. But now, according to the Tax Commission, they expect that the cost of taxing horizontal production of 1% for 4 years, rather than the normal 7% rate, which is what we tax traditional production, is going to be $250 million in 2014, and above that in 2015, and we would argue that they actually understate the actual cost, at least in 2015. The chart at the bottom adds in the cost of the credits for deep well drilling, and then the cost of rebates that get paid out for other kinds of favored drilling. If you put it all together, it's over $300 million this year and next. So when you're looking for the explanation of why the state revenue collections have been flat, and we're facing potential shortfalls. This is certainly not the only explanation, but it's one of them. So that's the short-term outlook. But we always, because some of you may not already be depressed enough, always find it important to call attention to the fact that we face significant long-term or structural deficit issues. So structural deficit is when the normal growth of revenues is insufficient to finance the normal growth of expenditures year after year. And these projections were done a few years ago by Dr. Kent Olson of OSU, who is supposed to be here today. And basically, he just looked at, if you make basic assumptions about growth of various taxes and growth of normal expenditures given population projections, what are we looking at? And I think what we're looking at is what we've been seeing, and that is a growing misalignment where revenues are not growing as rapidly or as consistently as the cost of providing basic services. The structural budget deficit has a number of components and contributors. Certainly rising healthcare costs as we're facing a aging population, the retirement of the baby boom generation, fewer people working, more requiring more expensive healthcare costs. We've got pension liabilities which need to be addressed, but which I will say important steps have been taken in recent years. We have a growing prison population and an aging prison population. That's creating long-term budget pressures, which also cry out for action. An outdated tax system, don't get me going. There's lots of that. Part of it is that we have a service economy, but we tax goods and not services. The implication of e-commerce, where some change may be on the horizon, but essentially how do states and local governments get tax revenue from the growing share of commerce that is done online. There's various corporate tax avoidance strategies that have also impacted the corporate income tax. And then the tax policies that have been enacted in Oklahoma and other states have an impact as well. When you keep cutting taxes, when you lower the top rate, when you provide exemptions for seniors, we love our seniors, hope to be one, but when you take the largest portion of the population and say we're going to exempt retirement income for all seniors regardless of income, that has real consequences as well. So I will wrap up with number 11. The last thing that you should know about Oklahoma budget and taxes, that Oklahoma needs sensible tax reform. And we have written and talked at length about many of these issues, and we did a full issue brief up on our website on what modernizing the tax system might look like. I hope we'll have a chance to talk about some of these in the panel that will be coming next. But what we see as some of the core priorities, first of all, avoiding further income tax cuts. I would argue that the Supreme Court threw the legislature a lifeline by striking down 2032 and saying that the tax cut that was passed last session, while the fiscal situation looked fairly bright, saying that that can't go into effect. I know there will be a debate this session, but avoiding further tax cuts seems to be the first measure should be taken. Curbing unnecessary tax breaks. I've suggested one that might, and does seem to be gaining greater scrutiny, that is the tax break for horizontal drilling, but that there's others that certainly need to be looked at. Auditor Jones, who's here today, and Representative Dank and Senator Mazie have spent a lot of time on this issue in recent years. We've done some things. There is more that could certainly happen. Adopting combined corporate reporting is a way to curb loopholes that corporations use. A majority of states and virtually every western state other than Oklahoma has adopted combined corporate reporting. Oklahoma has not done so. It's been recommended at times, but that's something to be looked at. Modernizing the sales tax would involve going further in making sure that we are able to collect taxes that are owed on online purchases. I probably shouldn't mention it to people while you're getting ready to file your taxes, but we do owe taxes on online purchases. But if the retailer does not have a physical presence or a nexus in Oklahoma, then the state can't require them to collect and remit those taxes. Congress needs to take action, but if Congress doesn't, there are things that Oklahoma can do, so-called Amazon laws that several states have passed. If we are looking at tax reform and broad-based tax changes, then we should target tax relief toward those in greatest need, which means don't cut the top income tax rate. It could mean increasing the personal exemption, which has been stuck at $1,000 per household member since, I think, since Fred Flintstone was filing taxes. We could also stretch out our brackets and index brackets. There's a number of things that you can do. And then the last is something we've talked about a little bit, adopting a pay-go requirement. This has been implemented at the federal level at times. It says any tax cut needs to be offset by specific clear spending cuts, and any new spending needs to be associated with tax increases. It does provide some fiscal discipline that we don't currently have. Just going to leave with some links to where you can go for more information. And this presentation will be, it is already loaded on the okpolicy.org website on the Budget Summit page, and we'll be sending that out. So with that, I will stop, and I think we have about 10 minutes for questions. Do we have microphones? I think we have microphones. Yes, we have one microphone over there. We have one microphone. Given the size of the room, if you do want to ask a question, go to the mic. I'll give you a couple minutes. And then I will mention just a quick plug for the next panel. Of the state leaders, we're going to ask people to write their questions down on the notepads that are on your table. We now have OK Policy swag. It's so exciting. Notepads. Is anybody going to want to ask a question? I saw a couple people getting up. They may have been going on break. If not, we have. Oh yes, go ahead.
You might have touched on this Can you talk about how tax credits might have impacted our revenues?
How tax credits?
Tax credits that have been given. And if there is sufficient accountability for whether the tax credit really has produced the jobs or whatever it was a credit for.
The category of tax credit encompasses a lot of different measures. Some of them are fairly modest and are claimed by relatively few taxpayers and may only be worth $1 or $2 million a year. Others have been more significant. At this point, besides the drilling tax credits, quality jobs is the most largest one and most expensive, and it's actually over $100 million a year, and it has really increased. In general, quality jobs is considered a strong program. It has some accountability, but I don't think there's a really good understanding of why it's gone from $40 million to 60 to over 100, and we've shared a couple of guest blog posts that Mark Lash has done about some ways in which quality jobs have been brought in. There's a number of others that have been scrutinized pretty closely. I mentioned the auditor and the House and Senate have been looking quite closely at tax credits. There was one reform that's been made, is that tax credits that previously were transferable, we've done away with that and made them refundable instead. I think that's probably a good reform. But overall, we don't provide enough transparency and accountability. Too many tax credits can be claimed without any regard to what economic impact they're expected to have and what economic impact they actually do have. So that's an area where I think it is important to look at, because it does frequently happen that a very limited tax credit that was passed for one specific purpose, when it gets in the hands of tax lawyers and accountants, suddenly can become very big and very expensive, and we've seen that happen repeatedly over the last couple of decades, and by the time you can actually do something to address it, it's, you know, that $5 million credit is a $40 or $100 million credit. All right, anyone else want to? Yes, John.
What you were describing today reminds me of last night on Fresh Air on NPR, where they were describing how in Wisconsin, the same basic pattern, and describing how in Minnesota, they've followed one approach, Wisconsin, they followed the Oklahoma approach. What they were saying was, both the Democrats and the Republicans, and you can see especially in Wisconsin, have brought money from across the country in order to promote their agenda. But he said that the big difference is that, for instance, in Wisconsin, all the conservatives would be on the same page. But among the Democrats, the corporate funders, the high dollar people, weren't interested in labor, and they were not interested in joining with labor. So it's been on the Democratic side and the liberal side, it's been the liberals, labor against these changes, but on their side, it's everybody in there together. Does that make sense for Oklahoma? What do you think? That analysis?
I'd have to think, certainly think further about it. It is worth thinking. It sounds like it makes sense, but we are in a different situation here. I did not hear that discussion last. I read the article in the Times on Sunday, but didn't hear the discussion yesterday. Okay, we have a great panel coming up and lots of people who are going to have lots to say. So I'm going to invite Marie Price.